Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Hopefully, you're all having a fantastic Friday. It has been another exhilarating week in the markets. We've seen all sorts of things come to fruition. And we're going to be doing a little bit of recapping. We're going to be looking at the fact that the Fed has continued to add to their balance sheet this week and essentially has done or undone nearly 2/3 of quantitative tightening. Now, this is strange given the fact that they raised a 25 basis point rate hike on Wednesday, because it's very contradictory. The Fed are damned if they do, damned if they don't. And ultimately, this is flaring, or certainly fueling, I should say, the Bitcoin and crypto fire. But we've got a lot to get into in this video. We're going to be looking at the macro. We're going to be looking at comments from Bilaji. We're going to be looking at news from Tether. We're going to be looking at news from the EU that is essentially blaming the US banking crisis for what's going on there. And we're actually looking potentially at some contagion with the likes of Deutsche Bank, who have their credit defaults, their insurance costs going through the roof. I also want to talk a little bit about how actually I really do think the world is looking to move away from the kind of dollar hegemony, the US hegemony. And we can see and I've actually spoken about this quite a bit, that President Xi recently told Putin change that hasn't happened in 100 years is coming, and we are driving the change together. There's lots and lots of things going on, guys. We'll also look at rates, where they're implied in going, and the fact that banks are missing hundreds of billions. So this is going to be a jam-packed video, but really we're going to start off with a little bit of technicals. Just reiterate my stance. We've took a position back in the cryptocurrency market, and we're looking to ride the upside that I think we're going to have over the next 3 to 6 to a year to 24 months. We're very mindful that, it is a shitstorm around us, and that where there is likely going to be the yield curve playing out at some point. The real, I guess, $1 million question is, when does that occur? And we will be watching this vigilantly. And ultimately looking at it as an opportunity. I'm very set on crypto being the next technological revolution, and I think it's going to change all our lives. I'm very fortunate to be in the position that I am, where I get to talk to hundreds of projects out there, CTOs, CMOs, CEOs, and honestly, I'm nothing short of bullish. So you guys know the kind of journey we're on. It's no surprise that we've paused where we have. Our target is 35K for Bitcoin. And actually, I want to just pull up the Bitcoin futures and just look at this a little bit more in depth, because you could get, if we go to the weekly, I do think Bitcoin is looking at certainly coming up here. So it's a coincidence as well that you've got this sort of CME gap at 35K. You typically close these. And it does look like you are looking to close this one. And I can't actually see much of a CME gap anywhere on the way down here that we haven't already filled. So I think Bitcoin's set. I think it's just going to stall at the 0.236 before you get that continuation. Remember, you're running into this kind of block of liquidity here. We did say this would get filled very, very quickly. And I think actually this is going to get filled even quicker. We're just waiting for the catalyst. We could, after the Fed did the 25 basis point rate hike, maybe see markets stall. We did say the kind of danger is you're more looking at a bleed up than a rally up on 25. On 0, it would have rallied up. We have had that bleed up. Things are very much going in the direction that we want them to. Forgive me, guys, my big face is always in the way. But ultimately, I do think that we're looking for upside. And I think Alts are still yet to have their day and play catch up. Remember, we've shown you what to look for this. Go and overlay the Bitcoin dominance chart with a total 2. When total 2 is going up and Bitcoin dominance is going down, that's when your alt season it will arise. So we're very much, I think, continuation. We're looking for, having got back into the markets here. If you guys want to find out where I bought, what I bought, how I bought, what I'm looking to do, my entire strategy on a daily basis, feel free to join the Patreon. It really is worth the money that you pay for it, in my opinion. The aims of that group is to make people better trader than what you typically get on, better traders, better investors, better sort of market analyzers than what you get on, your YouTube content. People will be able to pick them apart. Enough for the selfless shilling. So you might have a little bit of a stall in here. You already have had. You know, you can see you've got your big wicks coming in here. You've got your short-term time frames and a bit of a squeeze. You've popped out to the downside of it. And ultimately, you know, you want to see it kind of squaring up here and continuation. It doesn't look too bad at all. You can see that was a bit of a rising wedge. You popped out, you've done your double bottom, which we love, and now potentially you're looking for more upside. You might stall for a bit longer, maybe dance around here. But ultimately, I think upside is very likely, and we've got that target at 35k. Let's talk a little bit about the macro now that we've covered this sort of micro for Bitcoin. The Fed has essentially now added another $100 billion this week. So in 1 week, they've added $100 billion. I don't think people realize just the scale of what's going on here and the fact that it's likely to continue. And this is just the Fed balance sheet. This doesn't have anything to do with the swap markets or any other kind of stealth QE that's taking place. But this is bullish for the markets because ultimately, whenever the Fed ups its balance sheet and the money supply, markets typically go with it. Okay? And they've undone 2/3 of what they spent a year doing in the form of QT. QT does not work in this system. You will implode it. And the Fed right now is 100% damned if they do and 100% damned if they don't. This was an interesting comment from Balaji. The return of stealth QE via the BTFP and opening of daily swap lines with friendly foreign central banks clearly signals that sovereign debt will be monetized and currencies will be further debased. The endgame is now undeniable. Absolutely, it's undeniable. And it is coming, guys. You know, you're seeing the Swiss that are essentially claiming the US banking crisis ultimately toppled Credit Suisse. But are they right? It says there's links here. The US is why all these problems have arose, essentially. No, I don't want to say that necessarily, but they're a big part in it. You know, if you understand how... Look at Japan, for example. Why is Japan so important? Well, it's because of the amount of debt that it holds and who that debt is accountable to. So Japan holds a lot of debt from other countries. That's why Japan is such a vital organism in the kind of macroeconomics, because if it got taken out, it would take out, you know, it's kind of like the it's foundational actually in how the debt system works. So with the US upping their interest rates, they've put a burden on everyone that people just simply haven't been able to fill. And this is why you're seeing banks really get hit hard. This is news from today, guys. Deutsche Bank shares slide 8% after sudden spike in cost of insurance against defaults. You can see you've got a sudden spike up here. You had a similar spike up in 2000, and obviously this is the March 2020 crash, and so on and so forth. So I don't think this banking situation or crisis is over. I think they're just going to cool it off. I think markets will rally on this, and then we'll have eventually stumbled into what the yield curve is likely predicting, which is going to be a crash at some point. Sort of maybe like a March 2020 style scenario. Interesting thing for Bitcoin, I get this all the time. Well, if you're invested, you know, what's your plan? Well, ultimately, I'm not 100% sure that we put in a new low. Forgive me, guys. I had to sneeze and did not want to do that on camera. So I don't know if we put in a new low. I don't know if we do something similar to this. It's entirely possible. Actually, you're setting up kind of similarly, right? To the bottom in 2018 to here. And you could see a similar thing take place, you know, when you sort of come up like this and then do something like that. And then we get continuation out of this. But I'm very set on the sort of mid to short term that we get that continuation, and we've been spot on so far, and I think we're going to continue to be so. I think there's going to be a lot of people with egg on their face that are still calling for new lows, and they've been calling for it. You know, they flipped bearish after the FTX spill, and then, you know, all of a sudden are now anchored down on that, you know, having sort of missed the bear party. We did say at the start of the year, you're kind of late to this bear trend. So this is very interesting. We also have rates. Obviously now rates are all getting priced in. The Fed absolutely is a damn lie, just like the crypto sniper says. You know, you can see this is forward-looking rates and kind of where they're at, where they're going. And you can see this is from Pepperstone, who I think is Chris Weston's company. And this is forward-looking rates. So you can see rates now getting priced out towards the end of the year. Remember, guys, this is the big macro game here. Markets went down with rates going up. Well, and they front run this, so we'll use the 30-day futures. You know, you haven't had a move like this in the 30-day futures. Trends end on volatility, right? We looked at the start of the year why we thought actually, you know, Bitcoin, this is the best time to get back into the market. But trends ending volatility, and this is implied rate. So this is the futures market for the Fed funds, the 30 days, right? It's a 30-day contract. This goes down, it means rates go up. All markets, just using Bitcoin as a prime example, front around this. You can put the S&P here, you can put gold here, or gold sold off a bit later on. And essentially, they're going to front run hikes. Or sorry, cuts. So if this does this, the market's probably already front running this right now. You know, I think you've got a window of opportunity ahead of you that could be 3, 6, a year, 24 months, even longer before you get this shitstorm and another kind of March 2020-esque situation play out. And ultimately, you know, we're looking to capitalize on this. We're looking to trade these markets. And if you guys want to get on board with that, feel free to join the Patreon. Honestly, I get so many sort of good vibes about what we've got going on in the Patreon. It's just a great community. You're going to stay up to date with what's happening in the crypto space. You're going to get on board with sort of where I'm at, where I'm going, and what we're buying. You know, we have a 100x altcoin basket. We've got, you know, to kind of moon shoots, if you will. We've got portfolio. And our portfolio is largely, I think, built at this point. So it's a great time to sort of join. If you want to wait till the start of the month, I know the end of the month's always tight for people. Then feel free to do so. So I'm probably going to love and leave you on that note, guys, as it's Friday. I don't want to keep you for too long. But this is the plan. Okay? We're looking for continuation. We think you're on your way to 35K. Just ride whatever pullbacks come. If you've not already accumulated, and this is not financial advice, just my own opinion, then maybe, take advantage of the dips when they happen. And look for that upside. And I ultimately think that the Fed is done with what they're doing. The Fed are damn liars. They're completely contradictory at this point, adding to their balance sheet like this, whilst doing a 25 basis point rate hike, which is largely insignificant, to be honest with you. It just has a little bit more pain that they can't really afford to suffer through. That is all I've got for you in this video, guys. If you've enjoyed the content, a like is always appreciated. So as a comment, have a wonderful Friday, guys, and I'll see you all in the next one. Thanks a lot for watching, ladies and gentlemen. See you in the next.